Tesla shares down more than 35% year to date, and the company now set to report earnings next week. Analysts divided on where the stock's heading from here, and so is the investment committee, it turns out. Bryn long, Weiss short. Bryn, make your case. Why should we still believe in this stock story?
Well, the stock right now doesn't look good. So let's just separate the two, the stock from the company. Make no mistake, the chart looks terrible. Don't forget that in January of 2023, I bought it around 120. This stock got to, I think, $100 during the early part of 1 day of trading. And that's with earnings estimates of $5 for full year 23. So we're not even going to sniff that this year. So this stock could go lower. So let me make that clear. It looks broken right now. While I would not what I wouldn't discount is Elon, is I think he's one of the most, prolific innovators and engineers of our time with SpaceX. Literally, I think NASA would be defunded with what he's done with energy storage and EVs, and then at Neuralink. And so I do think, though, he is going to have right now between this earnings report, which will be bad, and the shareholder package, I think it's very murky right now because make no mistake, part of this valuation is based on sentiment and also valuations, margins, and earnings expanding. So I see absolutely why Steve is short. I don't think he's going to be short long term. I think it's probably a trade, but I think longer time, we will get some clarity. And this will be, over the next few months, a potentially good opportunity to add or buy to the position.
My question for Bryn, and I'm not trying to be difficult with this, is that as a fiduciary of her investors' capital, how could she invest in a company where there is no governance, there is no independent voice on the board, where they've gone out and made an acquisition like Solar City, right, to stop it from failing because it was his brother's company and because the federal government told SpaceX, you've got to stop buying Solar City bonds with the money we're giving you for R&D, where he's tried to buy, use Tesla to buy material for his house, the windows, where he wants a $55 billion pay package, and where we saw Jack Dorsey with 2 companies. We've got Elon Musk with multiple companies that all require his time. Plus, there's the allegations, and we saw it on Joe Rogan's broadcast, of drug use. So how's a fiduciary own this company with anti-shareholder governance repeatedly, time after time after time? Isn't it worth just passing on this and going to something you don't have to explain owning?
Yeah, well, I own this personally, first of all. This is a personal position. So I think, we love to own broad-based ETFs for the majority of our client base. So this is not a fiduciary decision. This is my decision. And so I think that, what you're pointing out, these things, I think you just don't like Elon. And so I think that if you separate yourself and say, look at this company, well, I think that's the truth, right?
I'm not showing you sentiment. Everything I said is a fact, Bryn. It's a fact.
I know, but he's a grown man, and the Joe Rogan thing is just strange, and that was years ago.
It's not just Joe Rogan.
And so I think that if you just look at the company, and when you still look at the 2 companies where the best engineers want to work, is our SpaceX and Tesla. Because this is not an Elon show as well, although it feels that way. He has to be able to retain top talent. And I think as it relates to Tesla specifically, being pragmatic about the company, as I said, the chart looks terrible. And they are in a very murky situation right now because it feels like, are you going to be a car company that's balancing higher revenues, higher earnings and margins, and then also innovating at the same time with full self-driving, more energy and robotaxi? Or are you going to do a full pivot to robotaxi? I think if they come out and do that, that's a revaluation of the name on the downside, because that is probably 5 to 10 years out. So,
and by the way, Weiss, sorry, Bryn, if this is principally a governance related story,
that's one aspect of it.
Sounds like it's a major one. However, you could, right? It's major.
Even put that aside, the fundamentals deteriorating. We've hit limit in terms of the EV adoption. They've got the oldest EV lineup in the industry globally. They've got 20% of their revenues coming from China. We've seen what China has done. Okay, we've seen Apple move their supply chain to India. And they've got better relationships and longer standing relationships with the Chinese government. We've seen China. China is supporting their domestic producers that, by the way, make newer more richer in terms of the accessories, in terms of basically even the range of their cars than Tesla. That's number two. Yeah. Number three, we've seen Elon just tweet out, oh, no more prices, we're raising prices. He lied. They're cutting prices. We would say big robo-taxi announcement. We've secured funding for the take private. The guy is a pathological liar to keep his stock price up. So forgetting about that, the fundamentals deteriorating. You've got lots full of EVs that are selling at major discounts from the major auto players that couldn't sell them. So the fundamentals are horrendous.
Bryn?
Yeah. So I think that in China,
one more thing.
Actually,
no, let Bryn go.
One more thing. It's like one more like buzz line. It's like, once again, you just don't like Elon, by the way. And so it's like when you look at
genius. I've said that repeatedly.
When you look at the EV market, there actually continue to be, with BYD, the top selling brand in China. And so while we look at America, which is about 9% of the EV space, China, which Tesla was it's like the only manufacturing company that was able to build in China autonomously without having influence from the Chinese government. He has a very strong relationship. I believe they're about to announce they're going to be building their next gigafactory in India, a huge untapped market. And so I think that when you look at this company in the U.S., if this was a U.S. EV story, I would not own this name. I don't think Americans want to drive EVs. I think Americans don't want to drive EVs as their only car. But in China, it's a very different story.
Well, let me say something.
Hold on, let me work this in, and you can say what you want. Then we're going to be done. Adam Jonas today at Morgan Stanley. Why do we remain overweight Tesla shares? And look, he's been, skeptical along the way about, the repeated price cuts and all the other stuff. We believe Tesla has significant attributes to be valued as an AI beneficiary, but the company must first see stabilization in the negative earnings revisions within the auto business.
Yep. Right, he's not saying they have been. Yep. But Bryn's entirely wrong about their ability to retain talent. If you take a look at Tesla, and you take a look at, we just had two critical people leave Tesla this week. Their turnover in their executive ranks and their engineering ranks is legendary, is unprecedented. So I don't know where she gets that from, but look at the facts. And I know it's maybe because I just don't like Elon that all these people are leaving, but I really had nothing to do with it.
No, I totally, I mean, once again,
the stock is up. So you feel the stock is up 750% over the last 5 years.
Exactly. Yeah. And I haven't been short over 5 years. I'm short now because it's all coming home to roost.
I understand, but there are periods of time over the last 5 years where notable people have been short, and it hasn't mattered because their shorts have been proven to have not worked well.
Again, I haven't been short, number one. Number two,
I understand.
How many other EV manufacturers have we had over the last 10 years?
Bryn?
I don't even know what that means.
How many price cuts have we had with Tesla models over the last 5 years?
Steve, wisdom is chasing you if you would just stop. Okay? Seriously.
What the hell is she saying? I don't even get it.
Steve, we're going to take a break.
Just admit you're wrong and the stock is going lower. And I'll buy more lower. That's what she should be saying. Facts are facts.
There's no fact that the stock is doing anything.
There are facts with everything I said about the governance, about the price cuts, about his tweets that have all been wrong, about the competitive landscape, about the appetite for EVs. Those are all facts.
Bryn, we'll see.
Yeah, we will.
Did you hear what Steve said? He has been shorting Tesla for 5 years and he is still short. I've got a feeling that his story ain't gonna age well. Please remind us to review this video in 1 to 2 years' time and see how well this video has aged. By the way, what a heated debate between Bryn Talkington and Steve Weiss on CNBC. It's clear that opinions are deeply divided on the future of this company and its visionary leader, Elon Musk. Thank you for tuning in to InvestMinder, where we strive to provide insightful and unbiased analysis on the latest investment trends and opportunities. If you're new to our channel, make sure to subscribe and hit the notification bell to stay updated on our latest investing videos. Disclaimer, please note that we are not a professional financial advisory firm and our content is intended solely for educational and entertainment purposes. Any investment decisions should be made after thorough research and consultation with qualified professionals. Now let's dive into the Tesla saga and explore the key points raised in the debate. Elon Musk's innovative spirit and visionary leadership are undeniable, but concerns over governance, alleged anti-shareholder practices, and Musk's involvement in multiple ventures have been raised. Additionally, the declining stock performance, competition from other EV manufacturers, and questions about Tesla's long-term strategy have fueled skepticism among some analysts and investors. While the concerns raised by Steve Weiss about Tesla's governance and Elon Musk's behavior cannot be dismissed outright, it's crucial to evaluate the company's performance and potential through a more comprehensive lens. Undoubtedly, Musk's unconventional leadership style and occasional controversies have ruffled feathers, but his track record of disrupting industries and driving innovation is indisputable. Tesla's impact extends far beyond the automotive sector. The company's advancements in battery technology, energy storage solutions, and renewable energy integration have positioned it as a pivotal player in the global transition towards a sustainable future. Musk's ambitious vision for a fully renewable energy ecosystem, encompassing electric vehicles, solar power, and energy storage, is slowly but steadily becoming a reality. Moreover, Tesla's influence on the broader automotive industry cannot be overstated. The company's success has forced legacy automakers to accelerate their electric vehicle programs, driving innovation and pushing the boundaries of what was once considered impossible. This competitive pressure has ultimately benefited consumers, offering them a wider range of sustainable transportation options. While concerns over Tesla's governance practices and Musk's unconventional behavior are valid, it's important to recognize that the company's success is inextricably linked to its maverick founder's vision and unwavering commitment to his goals. Musk's ability to attract and retain top talent, despite the criticisms leveled against him, speaks volumes about the allure of Tesla's mission and the belief in its long-term potential. Furthermore, Tesla's global reach and its strategic positioning in key markets like China and India cannot be overlooked. Despite facing challenges in specific regions, the company's commitment to establishing local manufacturing facilities and tailoring its products to meet local demands has positioned it favorably in these rapidly growing markets. While Tesla's stock performance has been volatile, it's essential to look beyond short-term fluctuations and consider the company's long-term growth potential. The transition to electric vehicles and sustainable energy solutions is a megatrend that is gaining momentum globally, driven by concerns over climate change, energy security, and the need for cleaner transportation alternatives. Tesla's early mover advantage in the electric vehicle market positions it favorably to capitalize on this trend. The company's brand recognition, technological prowess, and vertical integration across the supply chain provide it with a competitive edge that will be challenging for newcomers to replicate. Additionally, Tesla's continuous investments in research and development, coupled with its ambitious plans for full self-driving capabilities and the development of a robotaxi network, underscore its commitment to staying ahead of the curve. Critics may argue that Tesla's product lineup is aging, but the company has consistently demonstrated its ability to iterate and introduce new models that capture consumer interest. The highly anticipated Cybertruck, Tesla's foray into the lucrative pickup truck market, has already garnered significant pre-order interest, showcasing the company's ability to disrupt established segments with bold and innovative designs. Moreover, Tesla's leadership in battery technology and its strategic partnerships with companies like Panasonic position it favorably in the rapidly growing energy storage market. As the world transitions towards renewable energy sources, the demand for efficient and cost-effective energy storage solutions will continue to rise, presenting Tesla with a significant growth opportunity beyond the automotive sector. While concerns over competition from established automakers and emerging EV startups are valid, Tesla's first-mover advantage, brand equity, and vertically integrated business model provide it with a strong foundation to maintain its leadership position. The company's unwavering focus on innovation, continuous improvement, and its ability to adapt to changing market conditions will be crucial in navigating the competitive landscape. One aspect that often gets overlooked in the Tesla debate is the company's potential impact on addressing global challenges such as climate change and environmental sustainability. Electric vehicles, when powered by renewable energy sources, offer a viable solution to reduce greenhouse gas emissions and mitigate the detrimental effects of fossil fuel consumption on our planet. Tesla's mission extends beyond mere profit motives. It is a catalyst for a sustainable future, inspiring other companies and industries to embrace eco-friendly practices and technologies. The company's relentless pursuit of innovation in areas such as battery technology, solar energy, and energy storage systems has the potential to revolutionize the way we produce, store, and consume energy. Furthermore, Tesla's success has sparked a wave of investment and interest in the development of sustainable transportation infrastructure. As more consumers adopt electric vehicles, the demand for charging stations, smart grid technologies, and renewable energy sources will continue to grow, fostering a virtuous cycle of innovation and adoption. Critics may point to the challenges associated with scaling up electric vehicle production and addressing issues such as range anxiety and charging infrastructure. However, these challenges are not insurmountable, and Tesla's pioneering efforts have already paved the way for significant advancements in these areas. The company's commitment to building a vast network of superchargers and its recent investments in battery manufacturing facilities are testament to its dedication to overcoming these hurdles. Moreover, Tesla's impact extends beyond the realm of transportation and energy. The company's forward-thinking approach to manufacturing, with a focus on automation and vertical integration, has the potential to reshape industrial practices and supply chain management. Tesla's ambitious plans for fully autonomous driving and the development of a robotaxi network could disrupt the transportation sector as we know it, enabling more efficient and sustainable mobility solutions. While the road ahead may be fraught with challenges, Tesla's unwavering commitment to its mission, coupled with its track record of innovation and disruption, positions it as a force to be reckoned with in the transition towards a more sustainable future. As we come to the end of our analysis, it's clear that the Tesla story is far from over. While the company and its visionary leader, Elon Musk, have faced numerous criticisms and challenges, their impact on the global automotive and energy landscapes cannot be understated. Tesla's relentless pursuit of innovation, its bold vision for a sustainable future, and its ability to disrupt established industries have positioned it as a trailblazer in the transition towards clean energy and transportation solutions. Whether it's through its cutting-edge electric vehicles, advanced battery technologies, or ambitious plans for autonomous driving and energy storage systems, Tesla continues to push boundaries and challenge the status quo. Despite the controversies surrounding Musk's leadership style and governance practices, the company's unwavering commitment to its mission has inspired a global movement towards sustainability and environmental consciousness. Tesla's success has not only spurred competition within the automotive industry, but has also catalyzed broader discussions and actions towards addressing the pressing issues of climate change and energy security. While the road ahead may be bumpy, and the debates over Tesla's future may continue to rage, one thing is certain. The company's impact has been profound, and its potential to shape a more sustainable world is undeniable. As investors and observers, it is our responsibility to assess the risks and opportunities objectively, while acknowledging the transformative power of disruptive innovation. Thank you for joining us on this journey, exploring the intricacies of the Tesla saga. We hope that our analysis has provided you with valuable insights and a deeper understanding of the forces shaping the future of transportation and energy. Until next time, keep exploring, keep questioning, and keep an open mind to the possibilities that lie ahead.
Thanks again for watching, and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.